Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And you are listening to the Financial Survival Network. This is Kerry Lutz, and there's a little town in the great state of Texas. I happen to like that state a lot. My son attends college there. It's just finishing up, and it's called Knippa, and that is where the person you're about to hear from originates from. His name is Trey Knippa. Probably heard about him elsewhere. I got kind of came about him a little circuitous route from Jim Rickards' PR person put me onto him. He's got a site that you're definitely going to want to take a look at called shortjapandebt.com. Well, rather than me telling you about his theories and how to make money and keep your sanity in the current economic chaos, I'll let him do it. Trey, welcome to the show.
Thank you, Kerry. It's a delight to be with you today.
So a little bit about you. Tell us how you got into this and what your values are and how life led you to your present path.
No problem. I have a background in agriculture. I'm from Texas, in South Texas specifically. I went to Baylor University on a track scholarship. I was there when Michael Johnson was there, the guy with the gold shoes, who I think currently has the world record in the 400 that he set in Atlanta some years ago. And then I got a degree in finance, but I was still interested in agriculture. I studied agricultural economics. And if you've got a degree in finance and agricultural economics, that tends to lead you one of 2 paths. One of those paths would be agricultural banking, which is just as exciting as it sounds, or you go into trading. So I first started out as a commodity broker, and this is actually an important part of the story, in Dallas, Texas. I was at Prudential Securities, and I was there. I was doing my thing, trading cattle and corn and all that sort of thing. But every time I called the trading floors at the Board of Trade and at the Merc in Chicago, you'd get the guy on the phone and he'd have that crazy Chicago accent,
I know exactly what you mean.
Yeah. I was like, I've got to be there. If you're going to be an actor, you got to live in LA. If you're going to be an investment banker, you got to live in New York. And for me, trading, that's where I wanted to be. So I packed my things up. In 1996, I had $400 in my pocket, and I moved to Chicago. And next thing you know, I became a member of the exchange, and I was mainly focused on cattle. And then I slowly sort of expanded the markets that I focused on because of just the nature of being down in the pit. Hey, let's go find out what's going on in the corn pit or the S&Ps or whatever. So I started trading a variety of products. And then one day, I traded a lot of crude oil, and you cannot trade crude oil without having a pretty good picture of what's going on geopolitically in the world. So that's when I really started focusing on what was going on. And guess what? You can't trade crude oil without knowing what's going on in currencies. So I started watching currencies. And then for me, the big moment was one day I'm on the floor, and this is a funny story. So my trading symbol is Waco. And the odd thing is that most people choose their trading symbol. For the people who are familiar with the floor, it's I'm wearing the funny trading jacket, and I've got this big badge on me that says Waco, and that represents my seat on the exchange. So you choose your trading symbol. Typically, people pick their initials. Where my real name is Herschel Curtis Knippa III, hence the name Trey. Well, that makes my initials HCK. Well, guess what? Then everybody would call me Hick if I used the symbol HCK. Well, I challenge you to find any Texan in the world that wants to be called Hick. Okay, so Hick was out. So then typically people will fall back on the school that they went to. Well, I went to Baylor, TCU, and MIT. Well, MIT, I can't use that symbol because that's a type of order. Anybody in finance knows that you've got an MIT order, which is market if touched. Okay, so I can't have that. TCU was taken, Frog was taken, Bear was taken, Oso, which is Spanish for bear, was taken. So I ended up choosing Waco. Now here's the punchline of the story. Ever since I got my seat on the exchange, I have now been called Wacko and not Waco. I've been called Wacko on Fox Business News, CNBC, Al Jazeera, Yahoo Finance. The list goes on and on. No one has ever seen my badge and said, "Oh, you're Waco. Did you go to Baylor?" Not one, not ever. So one day I'm on the floor and I look up and there's an interview going on with a guy by the name of Kyle Bass. I want the listeners out there right now
Yes.
Write that guy's name down. Go on YouTube. Listen to every single video he's put out. So here's Kyle Bass, and down on the floor, I can see the video, but I can't hear the audio because of all the yelling and screaming, right? They don't pump the audio in there. So you look up and you see the big Diamond Vision, like, a big TV like Diamond Vision's at a baseball game. And I see this interview with Kyle Bass, and down at the bottom, it says, most obvious trade in the history of finance. I'm like, wow, I wonder what that is, So I go to my screens, I pull up the interview on CNBC with Kyle Bass, and he laid out his thesis against Japan, and most particularly their government debt. So I watched the interview. It piqued my interest. I started researching a little bit more on my own, just about what was going on in Japan. There's a lot of this supporting data on my website. You mentioned it before, shortjapandebt.com. I put out a newsletter once or twice a week that gives updates about what's going on there, et cetera, et cetera. But so for me, I was convinced the thesis was right. So I called Kyle Bass's fund and I said, I'm in. And they said, no problem, Mr. Knippa. The minimum is 10 million. And I said, I'll get back with you. I wasn't quite ready to write a check for 8 digits.
Yeah.
So what I did was I said, come on, Trey, you're a trader. You've had a license since 1993. You've been on the floor since 1996. It's 2010. You ought to be able to figure out how to get some of this exposure for yourself. So what I did was I put together a strategy trying to deliver, for me personally, this type of exposure that Kyle Bass was getting in both the bonds and in the currency. So once I came up with a strategy I liked, a friend of mine who's a bond fund manager, I showed him what I was doing, and he looked at me and he looked at what I was proposing on doing. And he said, Trey, you're a complete idiot. I said, I'm sorry, what? He said, Trey, you do realize that there are entire chat rooms designated to people trying to figure this trade out. And you have figured it out. He said, why don't you launch some kind of a product where outside individual investors can invest in this strategy? So that's what I did. I started a CTA, a commodity trading advisor, called Kenai Capital Management. And I have launched that strategy with the specific objective of trying to get a very levered position for the individual investor in both the Japanese government bonds and in the yen. So that's what I've been doing. I was actually, when you mentioned earlier, Jim Rickards, I was giving a presentation in Cancun, Mexico, and a mutual friend of ours, is a guy by the name of Axel Merck, who's a money manager on the West Coast. And Axel said, hey, you guys need to talk to each other. So I met with Jim, hung out with him and his daughter, who's his press agent. And we just got to talking about this and that. Jim has now convinced me to start writing a book about what's going on in Japan. So I've been starting on that project, and the fund, my CTA has been growing. And it's been a delight being able to call him my friend. He is an insanely smart guy. Your listeners, if you haven't read The Death of Money, or if you haven't read Currency Wars, for goodness sake, go download it today and listen to it. It's a great books.
Yeah, I couldn't agree with you more. I've read both of them. I've interviewed Jim a number of times, and he lives in the area where I used to have my office, and part of the country where I used to live, and I'm happy to be out of now, but that's another story.
Indeed. So
sunny South Florida now, but yeah. So Japan, it's a basket case economy, yet their export machine keeps exporting, right?
Not necessarily true. One of the cornerstones of what a lot of people offer as their, let's just take the prime minister, for example. Let's start at the top. Let's start with Shinzo Abe. The idea is that if we devalue the yen, then exports will follow and we'll all live happily ever after. Well, if that's the case, why is their current account turned upside down now? They've had a recent uptick in it, but all in all, the current account deficit has been growing. So not a current account surplus. And why is that? Because by devaluing the yen, you have made imports to the Japanese more expensive.
Right.
Now, let's back up a second here, because we need a frame of reference to talk about. Understanding Japan requires a bit of economic history. And let me give you a little hint here. The economic history is going to sound very, very familiar. The Japanese had a real estate bubble that popped in 1991. And at one point, I think real estate in Tokyo, there's some of the quotes I've seen that, 1 square inch of Tokyo real estate was worth 1,000 square feet in Manhattan. I mean, just a complete bubble by every definition, and it blows up. Now, those banks should have suffered. Those lenders who lent money on overvalued real estate, they should have gone under. You can't have having capitalism without bankruptcy is like having Christianity without hell. It just doesn't work. So they should have gone under, but they didn't. Those banks should have gone under, but they didn't. The government steps in, bails out the banks. The Bank of Japan lowers rates to zero. Does this story sound familiar yet?
Yeah,
this is exactly what we're doing. Yeah, I've read this book.
I've heard this.
So what
Deja
they have
vu
done
all over.
Yeah. So what they do is they say we have to increase. Paul Krugman talks about the miracle of Japan because Keynesian economics works, and we need to increase spending because if you look at the components of GDP, one of those components is G, government expenditure. So we got to increase G, and if you increase G, that will prime the pump, and away we go. That'll increase aggregate demand. Blah blah blah. So the Japanese acquire all this debt. They do infrastructure spending on trains and roads and bridges and all this kind of stuff. And what has been the result now? The debt to GDP ratio in Japan is 250%. Their government debt is 2.5 times the size of their economy. I've got news for your listeners. Those bonds will never be paid back. Not ever. It's mathematically impossible. And here's why. This story, a lot of people focus on the balance sheet of Japan. They look at assets, they look at liabilities compared to the GDP, whatever. This is a financial statement story. Do you realize that Japan's government spends twice what it takes in tax revenue and borrows the rest? That's like you make $50,000 a year, but you spend $100,000. How is that possible? Do you realize that right now, just the interest expense on their outstanding debt is half of their tax revenue? Half. So the Japanese borrow money for free, and still their interest expense is half their tax revenue. What that tells you is this is the most spring-loaded trade, quite possibly in the history of finance, because you're sitting here looking at a case where if interest rates go up literally 200 basis points, then you're looking at interest expense as more than twice your tax revenue. Boom, it's all over. If you went and borrowed a bunch of money on your credit cards, then can you imagine if your interest expense on your credit cards was more than you made in revenue and income? That doesn't work.
I can't picture it. So hey, when we return, let's get more into the shiny metal, how you acquire it, and how you use it to hedge this trade on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you just joined us, we've got Trey Knippa with us now. He's got an interesting website and a means for you to profit from the ultimate decline of the Japanese yen and the Japanese government bond, which is inevitable, called shortjapandebt.com. And Trey, so gold obviously is involved in this. The strategy you're using, what about China? You think China's in the same type of situation that Japan is, just a decade short? Decade before they go down the tubes. What are your thoughts?
Apart from their peg to the U.S. dollar, which I think is going to eventually break. And we hear a lot about China. Remember in the last presidential election, Mitt Romney, he said, I'm going to label China a currency manipulator, and I'm going to demand that they unpeg.
What's the U.S.? What is the U.S., the biggest manipulator of them all?
For sure. So I actually think Mitt Romney has the trade backwards, that if you unpeg the yuan to the dollar, then yuan would actually depreciate, not appreciate, because China has done this in phases. Phase one was we need to devalue the yuan and increase exports, and we're going to become the exporter to the world. And that worked for quite a long time until the global economy slowed down. So then they said, well, what's going to be our next leg to basically generate growth and to generate jobs and that sort of thing, so that the political elite can stay in power there and the Communist Party can stay in power. Well, the next step was for them to do infrastructure spending. And the infrastructure spending has been funded by more debt that is denominated in yuan. Well, now that's starting to slow down. You've got a massive bubble in their property values. I mean, they go build an entire office building or apartment building and none of them get sold.
Or city.
Well, needless, entire city.
Ghost city.
So that doesn't work. And that's being done with borrowed money, and it's being done with newly issued yuan. So I think, and there's another guy that your listeners should look up, a guy by the name of Mark Hart, who's given a great interview about this on Real Vision TV. And so I would actually say that if you unpeg, the unpegging will be because the Chinese want to reinvigorate that export market. Right now, you've got the yuan trading at like 6.2 to the dollar. I think that the next leg is that they're going to devalue, they're going to unpeg the yuan, they're going to devalue it, they're going to move it to about 12 to the dollar, 12 or 13, and they want to reinvigorate that export machine again. I think that's what's coming. Don't forget all the debt that the People's Bank of China, their balance sheet is covered up in US dollars. However, all the debt that's outstanding is in yuan. So you bet, let's devalue the currency that the debts are in. Government's have figured that trade out a long time ago. So that's a trade that's on the horizon. But as far as Japan goes, you mentioned earlier about precious metals. So, and gold specifically. Now, in order to have a proper position on Japan, you need to have a position in the bonds and you need to have a position in the currency, because let's get something straight. There's no way that they can pay these bonds back. There's no possible way that you can generate enough growth. And oh, by the way, I said earlier that Japan in 1992 has started this massive stimulus spending package. They lower interest rates to zero. What has been the result of all that borrowing? The Japanese GDP is the same size today as it was in 1992. Why is that not a complete repudiation? Why doesn't Paul Krugman have to give back his Nobel Prize? It does not work. They have spent and spent and spent and borrowed and borrowed and borrowed, and the return on investment has been zero. Their GDP is the same size it was in 1992. It's failing right in front of us. However, their bond market hasn't cracked yet. The options that you can buy on their bond market, I bought a whole big batch of them just last night. They are so mispriced, it's not even funny. I'm buying options that would get triggered if you move rates literally 40 and 50 basis points. And these things are trading insanely low, giving you an enormous amount of leverage if you could get the bonds to break. Why aren't the bonds breaking? Because the Bank of Japan is monetizing their debt. Here's a statistic for you. Do you realize that of all the bonds that Japan issues in 1 year, do you know how many bonds the Bank of Japan is buying? They're buying twice that amount. So not only are they buying the new issuance, they're buying twice that. How's that for some debt monetization? But guess what? The only pressure valve that can go is in the currency. That's the only place that they can avoid their bonds getting cracked, is by supporting the bond market by the Bank of Japan and issuing new currency. Why do you think the currency has gone from 75 to 122 since Shinzo Abe took office? Now, what I find funny is that Shinzo Abe has presented this like this is his plan. Listen, you fools, when there's more supply of something on the market, the value of that goes down. So there's a more supply of yen on the market, not because they're trying to do it, because they have to do it. There is no one who wants to buy a Japanese government 10-year bond that yields 0.35%. There's no demand for that. That's ridiculous. And what I find to be even funnier is that the citizens of Japan are putting up with this. So imagine you've got a retired person in Japan. Their savings is sitting there and it's paying a 10-year bond is paying 0.35%, yet your politicians are screaming that they need to make inflation go up. Oh, that's a great idea. So the things that I spend money on are going to go up in price, yet the yield on the yield and the things that I buy are going to, and the yield on my savings is going to go down. How is that possibly a good idea? That's absolute nonsense. And the citizens of Japan should be in full-on revolt. The only problem is it's a little too late. They're buying their bonds because they have to. The yen is going down because it has to, because the Bank of Japan is the only buyer for this debt. So you got to have a position balanced between shorting the yen and trading shorts on the bonds. And the right way to do the bonds, you get more leverage by going through the options. Okay. Now, how am I executing this? I'm executing it mainly through the futures market. And when you are short a currency, you have to be short a currency against something. Okay. For instance, I have a rental property in Pasadena, Texas, that is right near all the refineries in the Houston Gulf Coast area, and I have the mortgage on that rental property in yen. You want to borrow in devaluing currencies, and you want to lend in appreciating currencies, right? So I am collecting my rents in dollars, but as the yen devalues to the dollar, it takes less dollars to make my monthly payment because my monthly payment's in yen. Make sense? So
Absolutely.
I'm essentially short yen because I'm borrowing yen that I'm going to pay back as they devalue. So in this case, in my strategy with my CTA, I like the idea of being long gold in yen. If I'm short yen, I got to be I got to be long something against it. In that case, I want to be long a hard asset. Now, I suggest you go back and read all of Jim Rickards' writings. I think gold is a fine asset that I can be long against my short gold. I don't really want to be long U.S. dollars because I'm generally distrustful of Janet Yellen, and I certainly don't want to be long euros. That trade may be not working out at all because the euro's been breaking just as fast as the yen lately. So you got to be long something against short currencies. I like the idea of being long a hard asset. And guess what? I'm not alone. Kyle Bass was interviewed with John Malden, and John Malden said, Kyle, if you can put every one of your assets in one trade, what would it be? You know what Kyle Bass said? He said, I'd buy gold in yen and put it in a drawer and open it in 10 years and see where it's at. So good enough for me. Pretty smart guy. If he says gold and yen, I'm in. Well, guess what? Who else has said it? John Malden said it. Dennis Gartman has said it. We can go on and on. Long gold, short yen, and that I've got wrapped into my strategy.
Sounds like a sound strategy. I mean, governments, they're always the ultimate accommodating loser. Their interests are never, ever the right ones, it seems. They're always doing exactly the wrong thing, right?
Get reelected. Yeah. That's what governments exist for, is to gain power, get reelected. And hey, I got to hand it to a lot of, let's just take our president. President Obama, he may have gone to law school at Harvard, but this guy's good at math. And the math that he's figured out is that if you take money from 1 and give it to 9, do you know what that gets you?
Elected.
Reelected. You got it. Government guys are good at math, and they know that. Take from 1, redistribute to 9, and watch the votes pile in. That's just good sound math right there.
Yep, absolutely. No question about it. I mean, that's really what it comes down to, right? It's
Indeed, it is
all about getting reelected, giving out the goodies to your constituency, and hey, the country be damned.
Indeed. So right now, granted, the U.S. dollar has been firm. I anticipate that it will continue to be firm simply because everybody else is QEing. They're putting their foot on the gas on QE. And man, I would not want Janet Yellen's job for anything in the world right now, because her only choices ahead of her are bad ones. I mean, she's boxed in. I mean, she's got to think about raising rates. The only problem is, what does that do to the dollar? And by the way, I'll just say it publicly right now. Janet Yellen's not going to raise rates, and QE will be back online by 2016. I say June of 2016, because when all you have is a hammer, everything looks like a nail. And at some point, if we see any blip in any of the economic numbers, then she's going to come back with QE. And guess what? The dollar firmness right now is kind of doing her job for her. It is sitting there saying, hey, are you sure you want to raise rates and firm up the dollar? So it's almost as though that it's not that the U.S. dollar is so strong. It's just that the other currencies are so weak. Suddenly, we are the least ugly of the 5 ugly people in the room.
Yeah, it's crazy. And like I always say, when you go to a brain surgeon for an examination, you're going to wind up with brain surgery, whether you need it or not. And that's what central bankers do. That's it.
And the message that baffles me, and it's coming from all central bankers, and I have to cut a couple of them some slack because they went to MIT also. So I always have to say that with in an odd way. But here's what I find odd. I want to know, and I mean, maybe you know who the PR firm that inflation hired to do their PR, because they're doing a great job. Yeah. This business about, we're targeting inflation, nothing, that is such nonsense that the Fed thinks that, number one, they're the ones saying, oh my goodness, we're having so much time generating inflation. Give me a break. Is that really what you think that your mission is? Since when did inflation become a good thing? I got news for you. Inflation is a negative side effect of central bank activity. The prices go down because of more efficiency, because of more productivity. And guess what? There's only two ways to increase GDP, and that is an increase in productivity and an increase in population. The Bank of Japan has not figured out that they need to increase babies, not increase money supply. That would be the best thing to help their economy. Yeah. And an increased number of yen doesn't necessarily increase the number of babies. Here's a statistic for you. By 2030, there's going to be 3 retired people in Japan for every 1 working age person. How does that work? Karnak the Great predicts that their Social Security expense might continue to go up, right?
Yeah, that's correct. And if you remember, faced with declining birth rates, Putin was actually giving away money to get the young people there in Russia to breed more. Maybe that's what they need to be doing in Japan, or open up the immigration floodgates. I don't know. They need to start thinking about that as well. Anyway, Trey, I really enjoyed having you on. What you're saying just makes so much sense, and we will definitely have you on again. Thanks so much, and it's really been a pleasure.
Thanks, Kerry. I'd love to be on again, and maybe we'll conquer the immigration discussion next time I'm on.
Well, that would be great. And hey, we'll put together a list. And if you have any questions, send it over to KHL@kerrylutz.com. Trey, again, website for people who want to get in touch with you and find out more about what you're doing.
ShortJapanDebt.com. Visit me there, register for the newsletter. My email address is right on the site. It's the same email address my mom has. So I can assure you that I'll get it.
All right. Excellent. And make sure you check out financialsurvivalnetwork.com. Sign up for our mailing list. And Trey, we'll talk to you again soon.
Thanks for having me on, Kerry. I really appreciate it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.